Hi traders, Greg here with a market update. What a crazy start to the week for markets. We have gone from extreme fear to extreme euphoria in a very short space of time. On Monday morning, markets were trading risk off, and obviously a lot of fear in the markets after what happened on the weekend with the breakdown in talks in Islamabad between the US and Iran. But that risk off trading and that fear did not last the full day of Monday, because we started to hear from Trump, and we pretty much haven't stopped hearing from him, and he's been pretty much saying the same thing, and that is that Iran has contacted the US and him, and that they are begging to do a deal. That he's confident that it's going to happen, and not only that, is that he is going to get everything that he wants. So look, that has certainly reassured markets in a big way, and so we have seen markets since Monday, well, pretty much in the US session from then, trade risk on and very aggressively risk on. So if we look at US equity markets, S&P and NASDAQ have been certainly leading the way for risk. They have now not only rallied, but they have actually rallied above the level where they sold off from at the beginning of the war. So absolutely incredible performance by US equities. S&P at the moment is literally only 0.5% away from new record highs at 7,000. So just to put that into perspective, we are so close to record highs. I can imagine if and when we get the headlines that a deal has been done, we will go straight through record highs with a bullet, and no doubt, obviously, making new record highs. There's only one way to classify that, and that is bullish. So yes, at the moment, I would not be looking to fade these aggressive US equity moves, because certainly if this continues on, it's going to get some more momentum, no doubt. Okay, if we look at crude, obviously that's probably the most important market that market is focused on. On Monday, crude had a big gap higher. We made a high of at the 105. But then obviously the headlines hit, and crude has subsequently traded lower, and it's traded a good $15 lower to be opening Asia today, just above $90. So that's a big move lower. It has not paid to chase crude above $100. Every single time it's been up there, it has been pushed down, and obviously, Trump has helped in most of those occasions. So obviously he's been watching it like a hawk, and every single time the market needs a nudge lower, Trump has certainly been telling the market exactly what it wants to hear. But in any case, look, crude trading lower takes a lot of stress from the market. Now, look, one of the things that even if we do get the headline that the war is over, we still have lost 1 billion barrels of crude supply. That is going to take some time to get back. So yes, crude probably can still trade lower on those headlines. Potentially we could, obviously see crude break $90. But just how low it goes, I think that probably down towards $80 is probably going to be a bit of a floor for some time. So we might, if we do hear those headlines, war's over, maybe see a range of say $80, $90 or thereabouts, give or take a couple of dollars. But I think it's going to be very hard pressed to see crude in the short term to medium term trading sub $80 for any sort of length of time. But the key takeaway at the moment is that crude is trading a lot lower on these headlines. Market's pricing in all the positivity, and we are below that $100 stress levels. If you look at US bond yields, yes, they have followed crude lower. US 2 yields at the moment are around 3.75%. So that's 25 basis points from the highs that we made at 4%, and 10 years are down at around about 4.25%. Again, 25 basis points from the highs of 4.5%. So the yields are backing off stress levels, so that's massive relief for the market. And no doubt, if they continue lower, that is obviously going to help the market as well. So something to watch. The currencies have been following yields as well. So market is back selling US dollars. Now we've got euro back trading above 118 or around 118. So it's recaptured all the losses it made during the war. And we've got some banks now coming out with calls for euro to be trading above 120 again. Simple fact is that you've got a Fed that's probably going to be on hold for this year. But we've got an ECB with a deposit rate of 2%. Market's looking for ECB to raise rates a couple of times this year, as early starting as June. So the interest differential is going to start moving. The gap between US and the ECB it will be narrowing. So that's going to be a tailwind for the euro. So euro looks like it's a buy on dips. Aussie is back trading above 71 cents, 71.30 as we speak. 2-year highs around about 71.70. Aussie's risk currency, it is tracking exactly what's happening with US equities, etc. So obviously they continue higher. I can't see why Aussie's not going to take out that 71.70 and then start trading back above, and potentially tripping 72 cents. So we also do have some employment numbers out tomorrow in Oz. It's something to watch for. But look, key takeaway at the moment is that markets are trading with a lot of euphoria, trading risk on, pretty much trading that the war is over. And they expect headlines to come that a deal has been made. So if for whatever reason there's a plot twist and that doesn't happen, God help us all. That would be a massive shock. But anyway, good luck with your trades, and we'll check back.